Hello, very good afternoon to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Very good afternoon. Today will be Tuesday, the 25th of February 2025. So, as usual, before we jump straight into today's gist and highlight of the Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of news flow, events, and as well as the movement the intraday movement of the various broad-based cross-asset classes. So let us start with the movement on the major US stock indices first. So still recall that yesterday we do have a bearish bias on the intraday basis when I covered the short-term intraday technical outlook, stating that there's some technical weakness on the Nasdaq 100 and the Wall Street 30, which indeed we see a continuation of the weakness that has been played out on last Friday or spill over from last Friday, where we have a across the board sell-off on the major US stock indices, except for Dow Jones, but it's rather lackluster as well. The Dow Jones Industrial Average closed almost unchanged, but the worst hit was the Nasdaq 100, which is down by negative 2.1%, the S&P down negative 0.5%, and the Russell 2000 down negative 0.78%. And the reason why the Nasdaq 100 was the worst underperformer yesterday is because of the significant weakness that is being seen in the mega cap technology stocks, especially pertaining to the AI related and semiconductor play. So if you look at the semiconductor sector within the S&P 500 is the worst hit, with the one that's deep in the red. Nvidia is down negative 3.09%, and AVGO is actually down by negative 4.91%. And notwithstanding other mega cap stocks like Microsoft, pardon me, is down by almost negative 1%, followed by Amazon down by negative 1.8%, Tesla down by negative 2%, and Meta, Facebook down by negative 2.3%. And one of the reasons why Nvidia and the semiconductor industry within the technology sector of the S&P 500 was the worst performing, we call it subcomponent, is due to what I call more stringent measures implemented by the current White House, stating that to prevent Nvidia from selling its cutting-edge chip to China. So this was actually being made yesterday. Give me a minute. Let me highlight to you. Yes. This over here. So Trump team seeks to toughen Biden's chip controls over China. So there was actually a news flow stating that Trump himself and his team of advisors is actually eyeing more Nvidia curbs and Chinese sanctions. So what I could see over here is that number one is to escalate their restriction on China chips industry. And do not forget, Nvidia also has a significant, not significant, I would say rather relatively important revenue market in China. So that actually also explained the underperformance of Nvidia yesterday as well. And on the other hand, we also start to see the dollar strengthening against Canada over here. So what I could see over here is that Canada over here is the outlier over here, and Canada, the dollar strengthening against Canada, you also managed to actually drag up the dollar strength against the Aussie dollar as well, due to Canada and Aussie tends to have a inter-market direct correlation because both of them are deemed as commodity currency. And one of the reasons why the dollar strengthened the most among the major against the Canada dollar was the fact that Trump mentioned that he himself mentioned that the planned tariffs on Canada and Mexico are going forward. Still recall that at the start of this month, there was actually a 25% tariffs being actually imposed on Canada and Mexico. Then thereafter, about 2 days later, Trump actually hold back and saying that there will be some rooms for negotiation, and he delayed it until 4th of March, which is next Wednesday, yeah, next Wednesday, next Tuesday, pardon me, next Tuesday. And yesterday he did mention that um, things are not so rosy, and the tariffs will be likely to be hit on Canada and Mexico on 4th of March, which is next Tuesday. So that actually explained the spike up in the dollar against the CAD. So later I'll share with you when I touch on the intraday technical outlook. There's one very interesting cross pair that involves the Canada dollar that is actually shaping a interesting technical configuration that I have to share with you guys. So one thing I'm going to share over here is that the dollar continues to weaken against the yen. So the yen himself also is clearly the beneficiary of this ongoing trade tariffs uncertainty surrounding US and its key major trading partners. And also do not forget over here is that recently there are several key Japanese economic indicators that are supporting further normalization policy from Bank of Japan, and market is now looking for potentially another two more interest rate hike coming for Japan of 25 basis point each in the summer months of 2025. All right, so that's what I explained why after yesterday initial push up of the dollar yen, and we start to see the dollar yen weaken in today's Asia session. And later I'll share with you on the short term intraday technical outlook. Yesterday's short term mean reversion rebound that we highlighted has more or less played out as expected, and right now it's coming very close to the short-term pivotal resistance, where potentially the mean reversion rebound may have already exhausted its cost. All right, so later I'll touch on that when I cover the intraday technical outlook on the dollar yen. All right, so other potential news flow over here is due to the fact that right now Trump seems to be getting very tough on China. So what we could see over here is, let me highlight, yeah, this is the one. Okay, so Trump now has a proposed what shipping a swift action involving investment and trade. All right, that means we know that for Trump, the first place why he hit various key major trading partners with high tariffs, like Mexico and Canada, 25%, and potentially EU, another 20% on their automobiles, is to get these respective countries to actually invest in US via fixed asset investment, i.e., getting more European manufacturers set up plants in Europe, and getting more so-called other major trading partners that Trump deems has a trade surplus with US to set up their services hub and manufacturing hub back in the US. That means fixed income of, or we call it foreign direct investment from this country into US. Eventually, it will create more jobs for the US economy and reduce their trade surplus with the US. But right now, Trump seems to be now having a more hawkish rhetoric towards China. And right now, they say that he prevent China from actually this one, there's this little thing, there's this memorandum telling a key government committee to curb Chinese spending on tech, energy, and other strategic American sectors. So what it means that over here is that if Chinese policymakers want to actually negotiate with US to reduce whatever targeted trade tariffs that US White House has or desired on China products selling to US, China right now could not use this carrot to actually reduce these trade tariffs, because the memorandum saying that to prevent Chinese investment into key US strategic industry pertaining to tech, energy, and other strategic American sectors. So it seems to us that market is now realizing that this ongoing rivalry between US and China, especially among in the high tech arena, is not going to go off too soon. That means, i.e., potentially from a medium term perspective, we could start to see potentially more kind of two-way volatility into these two stock market, the US stock market and the Chinese stock market. All right, so these are the key economic events and data I'd like to highlight for you guys over here. So with that now, as well as the relevant movement on the FX market and the major US stock indices. And overall, what we could see over here is that one of also the beneficiary that in this ongoing uncertainty regarding about Trump's trade tariffs on off rather it's hot, lukewarm, or cold against his desired major trading partners, benefit gold as well, because gold yesterday continues to actually remains firm above our key short-term pivotal support, and is looking to retest the current all-time high that was printed on last week at 2,950 level. So later I'll touch more about that and cover the short-term intraday technical outlook on gold, XAU/USD. All right. So now without further ado, now let us now focus our attention to the intraday technical outlook segment. So with that, let me expand my screen so that you guys can have a better view on the chart. Right, so let me start with the euro dollar first. Okay, so the euro dollar yesterday it came down, but it managed to survive at the 1.044 short-term pivotal resistance level, pivotal support level. I repeat, managed to survive at the 1.0440 short-term pivotal support level. And also what we could see over here is that the hourly RSI continues to shape a series of higher low and managed to hold on above this parallel ascending trend line support. So without doubt, no change. We still maintain that intraday bullish bias for this ongoing corrective rebound sequence to play out using 1.0440 as my short-term pivotal support for today. First resistance it got to surpass will be at 1.0485. Above it sees yesterday's Asia session high at 1.0530 next for today. Only an hourly close below 1.0440 short-term pivotal support level will invalidate today's intraday bullish bias to kickstart a choppy downward movement back towards this potential kind of a triangle, medium-term triangle range-like configuration that was in place, that is still in place since 13th of January 2025 low, with the next near-term support to highlight or to watch out for if 1.0440 does not hold for today will be at 1.0360, which confluence with the 50-day moving average. Below it sees a deeper downward drift towards 1.0330. Right, so that's for the euro dollar. Still paying close attention to the 1.0440 short-term pivotal support to maintain that intraday bullish bias for a potential extension of this ongoing minor mean reversion rebound sequence. Next up will be the sterling dollar. So the sterling dollar also came down slightly but traded sideways and play around with our short-term pivotal support level at 1.2627. So we have a bit of excess for today. Will be at 26 figure level, and also what I could see is that the hourly RSI also managed to help up above a parallel trendline support as well. Parallel ascending trendline support. So with that 1.2627 access 26 figure short-term pivotal support level, maintain that intraday bullish bias for this ongoing mean reversion rebound scenario to continues to play out. We will be using this level here, okay, this level here as my first near-term resistance level to watch on an intraday basis, because yesterday during the start of the Asia session, there's this kind of little failure breakout and now turns into a significant level for the boost, in order for the boost to surpass to extend this minor mean reversion rebound sequence. That will be at 1.2674. A breakout above it exposes 1.2720 next, which is the minor swing high area of 17th of December at 18th of December. Only a push down and the hourly close below 1.26 figure level will starts to invalidate today. We call it today's bullish bias to kickstart a downward drift towards the next near-term support zone to watch will be at 1.2570/2540, and below it sees the next near-term support coming in at 1.2480, which is very close to the 50-day moving average, acting as a similar support level as well. So now what's up next over here will be the Asia Pacific currency against the Aussie the Asia Pacific currency against the dollar, pardon me, starting with the Aussie dollar first. So the Aussie dollar, like I mentioned at the start of today's Asia session, they do have a very close direct correlation with the Canada dollar. So we know that the Canada dollar was the weakest against the US dollar yesterday. That means the US dollar is the strongest against the Canada dollar yesterday because of this impending 4th of March trade tariffs that Trump threatened to actually fully go through because of the lack of progress between US and Canada on some of the grounds of the negotiation. So that's why the Aussie dollar also weakened in tandem with the Canada dollar against the USD. So no change. 64 for sure is the short-term pivotal resistance that the bulls can't surpass. And what yesterday it came down over here, it actually came down again almost test the first support level at 63.30, and also what you could see at yesterday price action also broke down the lower limit, or put it away, the minor ascending channel support that is in place since the low of 12th of February. So my first resistance level to watch will be this pullback area here of this channel minor channel support, now turns to a pullback resistance at 63.72. I don't want to tighten 63.72 as my short-term pivotal resistance level, because price action hasn't broken down below 63.30 unless during the European session we have a clear breakdown of the hourly close below 63.30. Then I will tighten the short-term pivotal resistance to 63.72. So still using 64 figure for now as my short-term pivotal resistance. A breakdown below 63.30 exposes the next near-term support level at 63 figure, followed by 62.70. We saw confluence with the 50-day moving average, I think, as a support level as well as 62.70. However, hourly close above 64 figure level will invalidate today's intraday bearish bias on the Aussie dollar to see a squeeze up towards the next resistance level at 64.30, followed by 64.70 next, which is the congestion area of 4th of December and 10th of December. So that's for the Aussie dollar. So next up will be the dollar yen. So the dollar yen yesterday, we do have a bullish bias for a mean reversion rebound scenario, and the mean reversion rebound minus the minor mean reversion rebound scenario almost hit our resistance zone at 150.70/95, printed an intraday high of 150.30. And what you could see over here is that because of this bearish shooting star candlestick that was formed, and also if you look at the hourly RSI from its oversold region over here, or from the bullish divergence, it starts to shape a bearish breakdown, okay, from a parallel ascending trendline support, indicating the lack of upside momentum on yesterday's mean reversion rebound. Likely this will be the tipping point of yesterday's swing high, minor intraday swing high at 150.30, where the bulls got exhausted, and there's a rising risk that the impulsive downward sequence may resume at this juncture. So with that, using 150.70/95, that will be my short-term pivotal resistance zone for today. We'll flip back to a intraday bearish bias on the dollar yen. First support level to watch on the intraday basis, 148, pardon me, 148.80/70. A breakdown below it potentially sees a downward acceleration to expose the next near-term support at 147.95, which is the 1.236 Fibo extension and the 1.382 Fibo extension from different degrees. So it's a Fibo extension cluster. Only hourly close above 150.95, a breakout above it invalidates today's intraday bearish bias to see the continuation of that minor mean reversion rebound scenario extending to the upside. Next near-term resistance level to watch, 151.30. A breakout above it sees the next resistance level at 152. This is a medium-term resistance zone, 152.40/75. Rather important because it confluences with the 200-day moving average, and as well as the 20-day moving average, both acting as a similar resistance zone at 152.40/75. All right, so that's for the dollar yen. Flipping to back to a intraday bearish bias because of the lack of upside momentum right now, using 150.70/95 as my short-term pivotal resistance level. All right, so lastly, on the FX space, let's touch on one particular FX cross pair I want to highlight to you all at the start of today's Asia session, which I mentioned will be the Canada yen over here. So we know that the Japanese yen right now is the strongest, kind of the strongest on a 5-day rolling basis among the major pair, whereas the Canada dollar is the weakest. So very interestingly, we start to see this very interesting 1-hour bearish bias chart technical element on the CAD yen cross pair. So I could see over here is that this dotted red line here over here, if you go to the daily time frame chart, is a very clear major bearish breakdown of a former major ascending trend, long-term ascending trend line channel support from the low of March 2020. So that is the pandemic low. There was a bearish breakdown of it. Daily close on 20th of February last week. And what we could see over here is that on a shorter term basis, very clearly, it starts to actually get involved in a minor downtrend phase since 13th of February high. And what we could see right now is that it potentially could be evolving in a bearish pennant formation with the first resistance at 105.38. So since price action haven't broken down the lower limit of this bearish pennant, which is at 104.74. I don't want to tighten my short-term pivotal resistance to be so tight at 105.38. I'll use that as my first resistance. Short-term pivotal resistance level will be at 106.14, which was the inflection point of last Friday, where it kickstart this very swift downward intraday movement. And also the upper limit of this minor descending channel acting as a resistance as well at 106.14. So 106.14 short-term pivotal resistance. Intraday bearish bias on the CAD Yen FX cross pair below 104.74 exposes the next near-term support level on the intraday basis at 104.08/103.95, which is the 0.764 Fibo extension taken from the high of 13th of February, and as well close to the lower limit of this ongoing minor descending channel as well. Only an hourly close and a breakout above 106.14 will invalidate today's intraday bearish bias on the CAD Yen cross pair to see a potential squeeze up towards the next near-term resistance level at 106.67, followed by 107.30 next. Right. So that sum up the intraday technical outlook on the FX market. With potential extra, we call it highlight to look out for will be the CAD Yen cross pair. So now onwards, next will be the major stock indices. Okay, starting with the Hong Kong 33. So the Hong Kong 33 continues to remain resilient in today's Asia session, managed to shape that bullish reversal right at our short-term pivotal support level that we highlighted yesterday. So give you a bit of access at 22,760. So 22,880 slash 22,760 short-term pivotal support level on the Hong Kong 33 represent the Hang Seng Index, so that we will maintain that intraday bullish bias. Near-term resistance level to watch on the intraday basis for today will be at 23,830. However, if price action suddenly starts to reverse down and break below 22,760, that would invalidate today's intraday bullish bias to see the start of a minor corrective decline sequence, exposing the next near-term support level at 22,470, followed by 22,130 next. That's for the Hong Kong 33. Onwards, next will be the Nikkei 225 or the Japan 225, we call it our platform. So yesterday, price action plummeted as expected and hit our first support level at 37,980. Right now, it's a couple of mixed elements that has taken shape on the Japan 225. What you could see over here is that the hourly RSI has started to trace out a bullish divergence yesterday after hitting its oversold level, where I start to see a series of higher low over here, higher low, and price action shape lower low, okay, on the Japan 225. So with that, we will maintain a neutrality stance on the Japan 225, neutral between 38,800 followed by 37,980 lower limit. Okay, so neutral between 38,800 and 37,980. Only a breakdown below 37,980 for hourly close below it will continue the downward drift towards 37,730 and followed by 37,415. So this is considered as a major range support. Why? Because if you go back to the daily time frame, this 37,415 is in fact the lower limit of this ongoing complex sideways range configuration that has taken shape since 27th of September last year. So overall, in a nutshell, due to mixed element on the intraday basis using the 1 hour chart, we will flip to a neutrality stance for today, neutral between 38,800 followed by 38,800 upper limit, lower limit will be 37,980. Okay, next up will be the German 30 representing the German DAX. So the German 30 managed to actually yesterday consolidate above, holding above our short-term pivotal support that is at 22,130. So no change. This is still a key pivotal support level to watch, also confluencing with the rising 20-day moving average. So we'll still maintain that intraday bullish bias for a potential recovery to take shape for the German 30. Why? Because price action continues to see a higher low on the hourly RSI, indicating some form of intraday bullish momentum that has started to creep back into the German 30. So first near-term resistance zone to watch out for will be at 22,600 slash 714. Above it, potentially see a revisit to the current all-time high area at 22,930 slash 23,050. Only a sudden push down and the hourly close below 22,130 short-term pivotal support will invalidate the recovery scenario to see the continuation of this a minor mean reversion corrective decline sequence, exposing the next near-term support zone at 21,690/21,540 next. So that's for the German 30. So what's up for the major US stock indices, starting with the US Wall Street 30. So for the US Wall Street 30, the price action reacted off exactly at the short-term pivotal resistance zone that we highlighted yesterday, 43,730/840, came down but can't break below the first support at 43,380, then starts to trade sideways, bounce back, hit the 50-day moving average, can't break out again, which is the short-term pivotal resistance that we highlighted yesterday, and trade back downwards. So what I could see over here is that it's a kind of mixed element that is taking shape right now. Momentum is rather positive. Why? Because of the bullish divergence that's been flashed out yesterday on the hourly RSI. So with that, we will flip to a neutrality stance for now on the US Wall Street 30 between 43,730/840. That will be the upper limit. Lower limit for sure will be this swing low that was tested again yesterday at 43,380. Unless price action managed to have an hourly close above 43,840, then potentially we could validate a kind of a minor mean reversion rebound scenario, exposing the next near-term resistance to come in at 44,190 next. However, if price action suddenly has a plunge below 43,380, then we will see the continuation of this minor impulsive downward sequence, exposing the next near-term support area at 43,120/42,980 next. All right, so lastly will be the Nasdaq 100. So the Nasdaq 100 plummeted as expected and hit our support level at 21,400. And right now it's coming very close to this minor ascending trend line that I drew from the low of 13th of January. I would say it's medium-term ascending trend line on 13th of January because it's close to more than 1 month. So already for this minor ascending trend line to a medium-term ascending trend line to be still taking shape over here. And what's interesting over here is that the hourly RSI also starts to shape a bullish divergence as well. So potentially there could be a minor mean reversion rebound scenario taking hold for today. So I'll be using after last Friday and yesterday's rather extensive sell-off on the Nasdaq 100. So with that, 22,220 short-term pivotal support on the Nasdaq 100 due to this bullish divergence, and it's coming very close to also a graphical medium-term ascending trend line of this complex range configuration that has been taking shape since the current all-time high that was made on last Wednesday from the low of 13th of January. This is the lower limit, the medium-term ascending trend line support. With that, flip to a intraday bullish bias for this potential minor mean reversion rebound that may play out. First resistance level to watch will be at 21,570, which confluence the 50-day moving average, acting as a similar near-term resistance area as well. Above 21,570, may see the next near-term resistance level coming in at 21,740, being defined as the minus swing high of yesterday, 24th of February, and the 20-day moving average also acting as a similar resistance level. However, if price action starts to plummet below 21,220, that would invalidate the potential mean reversion rebound scenario and see the continuation of this minor impulsive downward sequence, extending it towards 21,030 and potentially even 20,910/870, which is also the 3.618 Fibo extension taken from the high of 20th of February. All right, so that's for the Nasdaq 100. Due to the bullish divergence that's being flashed out, it's coming very close to a medium-term ascending trend line support. We'll be using 21,220 as my short-term pivotal support level, and we'll flip to a intraday bullish bias for a potential mean reversion rebound sequence only, with the next near-term resistance coming in at 21,570 and above it exposes 21,740. All right, so that's for the Nasdaq 100 for today. So lastly will be the commodities cross asset classes, starting with gold XAU/USD. So for gold XAU/USD, price action continues to remain firm. So that's yesterday there was also another retest, or I would say that today there's another retest at the current all-time high area at 2,954. So what we could see over here is that price action continues to be trading within this steepened minor ascending trend line, that minor ascending channel, that one in a brighter green shade from the low of 27th of January. So no change. I'll be still using 2,904 as my short-term pivot. Okay, so perhaps I'll use this here. Okay, so this level here, this could be my first support level to watch, which is the minor ascending trend line support at 2,930. But I don't want to target this so much unless price action can have an hourly close above 2,954 during the European session, that I will tighten it to 2,930. So for now, I'll be still using 2,904 as my short-term pivotal support level. Maintain that intraday bullish bias for gold XAU/USD above 2,954 exposes the next near-term resistance level, which is being defined by a Fibo extension cluster zone 2,990/3000. However, if price actually managed to have an hourly close below 2,904, then today's intraday bullish bias will be invalidated to expose the next near-term support level at 2,880, which confluence with the rising 20-day moving average. Below it sees an extension of a minor corrective decline sequence, exposing the next near-term support below at 2,845 next. All right, so still maintaining that intraday bullish bias using 2,904 short-term pivotal support level for gold XAU/USD for today. Now, lastly will be the West Texas crude oil. So let me open up the chart of the West Texas crude oil over here. So West Texas crude oil, yesterday we do have a bearish bias as well, but we highlight there's a chance of a potential rebound scenario taking shape first before that bearish bias resume. So indeed the rebound scenario takes shape and hit our first resistance level at 73.35. So what we could see over here is that at this moment in time, we have a short-term pivotal resistance level still maintained unchanged at 72.06. So 72.06 will be my short-term pivotal resistance level to maintain that intraday bearish bias on West Texas crude oil for today. And we will be using yesterday's minor swing low during the start of the European session where the bounce takes shape. Will be my first support level to watch at 70.40. Below 70.40 exposes 69.80, which is the minor swing low of 27th of December last year. Only an hourly close and a push up above 72.06 will invalidate today's intraday bearish bias on West Texas crude oil to see a squeeze up again within this kind of very complex choppy range configuration. The next near-term resistance level to watch will be at 73.27, which is the 50-day moving average. Above it sees 73.90/74.67, which is the 200-day moving average, I think as a similar resistance area as well. All right, so no change. Still using 72.06 short-term pivotal resistance level to maintain that intraday bearish bias on West Texas oil, except that the first support level to watch on the intraday basis will be at 70.40 for today. All right, so that's for the West Texas oil, and also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a look at the economic calendar. What are the key data to look out for today, Tuesday? So for Tuesday, what we could see over here is a rather quiet session as well. In terms of the economic calendar data release no clear Eurozone data to look out for. Because yes, this one 3 p.m. is the Q4 GDP growth number for Germany, but that's the final number. So it's more or less will be the same preliminary number that was released about 1.5 weeks ago. But we do have a Federal Reserve official speaking at 5:20 p.m. Singapore time. Fed Logan, he will be speaking at 5:20 p.m. Singapore time. Something to look out for as well. And during the European, before the start of the US session at 9 p.m., there's a ECB official speaking, ECB Schuldenberg speaking at 9 p.m. Singapore time. And at 10 p.m. Singapore time, Bank of England official Phil will be speaking. Phil will be speaking as well. And we do have tier 1 US economic data to focus. A leading one will be consumer confidence at 11 p.m. And we know that the previous consumer confidence data compiled by University of Michigan about 2 weeks ago start to show a decline in consumer confidence. So due to the uncertainty surrounding Trump's trade tariffs policy. So markets will be paying close attention to this conference about consumer confidence as well. Why? Because conference about consumer confidence also on the consensus, markets are expecting a slight dip to 103 versus 104.1 that was printed in January over here. and heading up towards the early part of Asia session tomorrow at 12:45 a.m. Another Federal Reserve official speaking, Fed bar, and 2 a.m. Singapore time Fed banking will be speaking. All right, and before the start of our daily dose tomorrow, we have one Australia inflation data that could impact the movement of the Aussie dollar and the Aussie crosses will be at 8:30 a.m. Australia monthly CPI indicator for January. Market is expecting it a rather stubborn number, a slight uptick to 2.6% from 2.5% in December over here. All right, so that's sum up today's market insights, today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you very much.